Hey everybody, welcome back. By now you should have gotten your download. You went and got the free ebook, and you went through and hopefully you read through it and you did the exercises that were in there. You made your list, you figured out what you wanted to do, and now you're down to starting your business, which is pretty cool. So you've made a lot of headway in such a short period of time, so you got to pat yourself on the back, be excited about what you're going to learn and what you're going to do. Now going forward, what you want to do is we're going to talk about the 4 different entities, about how you own a business, how you form a business, what those entities mean and what they mean to you, and they're very important. So go get something to drink if you need it, get a pad and pencil and take some notes, and let's jump right in. Now, what are the 4 entities of owning a business? You have a sole proprietor, you have LLC, you have an S corporation, and you have a C corporation. And we're going to go over each one of these. And what we want to do is we want to leave the LLC to last, and there's a reason for it, and I'll show you why. So let's talk about the first one, sole proprietor. Anybody can be a sole proprietor. Anybody can start a business, and all you have to do is literally say, now you're in business. So if your name is Bill Jones and you want to go rake your neighbor's leaves, you go knock on their door and say, I'll charge you X number of dollars for raking the leaves in your yard, and they either give you cash or they write you a check. If they write you a check, you take it, you deposit it in your bank account, and on you go. No issue. Pretty simple, pretty easy way to go. You do want to check in your municipalities, wherever you live, to see if there's any licenses required, because some businesses are required to have a license and some aren't. So it's up to you to go check. So if you live in a little town, go to the county seat and go ask them, and then they'll be able to tell you if your particular business requires a license or not. If it does, you must have the license. If it does not, then obviously you don't have to do anything. But when it comes to the form, the entity of your business, it's extremely important for several reasons between taxation and liability. Now, sole proprietor is the easiest form to take. You don't have to do anything, like I said. Now, but keep in mind, there's an old adage that goes, it's cheap to get married, it's expensive to get divorced. Okay, so you want to take that and keep that in mind, because it's easy to get started, but it also can be very painful to get out of this. And what's the reason for that? Hang on, we're going to get there. Next one we're going to go to is the S corporation, which is a separate corporation, and a corporation, just so you know, is like a separate entity. It's like a living organism. So the paperwork becomes its living thing that is liable for anything that the corporation does, like for collecting the money, paying the taxes, any liabilities that would happen down the road. The corporation is liable for them. You personally are not. Now, there is a thing called piercing the corporate veil, that if you don't do things right, then a lawyer can come in and get through the corporation and come after you personally. So this is important that you pay attention to this, because you want to set this up properly so you don't have any issues down the road. Now again, like I said, I'm not a lawyer, I'm not an accountant. You do need to go get a lawyer and accountant. You do need to go speak with someone, but do all the work first so that you minimize the time that you sit with the either attorney or the accountant, so you don't have to pay as much money. If you walk into a lawyer's office and you say, tell me the 4 entities of a business, how I can own a business, and say it takes him 2 hours to go through each one, and he's charging you $300 an hour, that's a $600 lesson. You can get the information here, figure out what you think is best, and then go talk to him, maybe spend a half an hour, and save yourself a lot of money. Okay, so now, that's the S corporation, and it's taxed. The way that an S corporation is taxed is that when the income for your business comes in, there is no tax when it comes in. It's taxed, it flows through you, so if you have a job, it flows to your other income. So if you have a loss, then at the end of the year, let's say you have a job, you're making $35,000 a year, you pay X number of dollars in taxes. If you have a $5,000 loss at the end of the year, and we're going to get into how you do that, at the end of the year, then that $5,000 loss is then put against your personal income and could put potentially the taxes that you paid back into your pocket. So it's extremely important that you pay attention to this. A C corporation is taxed a little bit differently. Now there are differences between these two. In an S corporation, there's certain write-offs that you can take and that you cannot take. In a C corporation, you can take more write-offs, but then there's more paperwork involved. So in a C corporation, and that's how most big companies are, Exxon, IBM, they're all C corporations. And what that basically means is that when the income to the business comes in, it's taxed when it comes in, it's also taxed when it goes back out. So it's double taxation, and it's a lot more paperwork. You need to have a yearly meeting. You have to keep track of your minutes, as you do in your S corporation as well. You need to keep track of that. You have to have your book. You have to keep all that. So if the IRS ever comes to you, knocks on your door and says, let me see your corporate meetings, the minutes from your corporate meetings, you can hand them the book, and then everybody's happy, and they go home and leave you alone. If you do not have that, they can say that you are operating outside of the rules of the law and revoke your corporate status, and then say that everything that came in was income to you, and you're taxed on that. You are also penalized for that, and there's interest charged on all of that. So it's important that you pay attention. I'm not trying to scare you. I'm trying to get you to pay attention. So that's the C corporation. The S corporation, it doesn't get taxed when it comes in, and then the income, the profit, or the loss flows to you, and it will save you some money at the end of the year. And then we have LLC. It's a legal liability company. And it's kind of a hybrid between these two. And what it means is that you don't have the paperwork that you have with a C corporation. You do get the flow through like you do from an S corporation. So any income that comes in, excuse me, is not taxed on the way in. It's only taxed on the way out. If you pay it out, if you take it as dividends, whatever, then you have to pay tax on that. But also the losses that go through a business. Say you start up in the first year, you didn't make any money, you had $10,000 loss because you bought equipment or whatever it was. That then flows to your personal income on your job. So let's say you paid $10,000 in taxes on your job and you had a $10,000 loss in your business, and there's some little things you have to do here that's not 100%, but just to make this easy for you to understand, you take the $10,000 loss from the business against your personal income, and basically you have no taxes to pay. Well, you say, yeah, but I already paid out the tax. Yeah, and at the end of the year, they'll send you a check back for $10,000. So it's a good way to go. So for most companies now, for most businesses that are starting up, especially if you're small, you would want to go the route of the LLC. It's much easier, it's less expensive, it's easier to handle. You don't need a board of directors. You can be by yourself in the business. You don't need president, treasurer, secretary, and all that. You can just be a sole member of the LLC, that's what they're called, and give yourself any title you want, president, CEO, whatever you want to do. That's up to you. A lot of big guys use LLCs. Now Donald Trump, when he started some of his businesses, they're LLCs, they're not C corporations. So it's important that you understand that. Now, why did I start off with a point at the sole proprietor? You do not, capital do not, you do not want to be a sole proprietor, and I'm going to give you the answer why. You go and you knock on your neighbor's door because you're now Bill's leaf raking service, and you go knock on their door and you rake their leaves, and everybody's happy, and they write you a check. And so then your neighbor comes out and finds out when you were raking the leaves, you raked over his cable line, and you did something to his cable line. He can't get his TV, the Super Bowl's on, he's mad as a hornet, and he files a lawsuit against you. Yes, I'm being ridiculous here, but this really kind of stuff happens. Or I'll use another example. You have a business in your house like a hair salon, and somebody walks up to the front door to come and get their hair cut, and it snowed, and you didn't get all of the snow and the ice off your front walk, and they slip and fall and break their leg or their wrist. They're going to sue you. If they sue you and you are a sole proprietor, they have access to everything you own. Your bank accounts, your cars, your home, literally your wedding ring, anything they can get to pay that's going to pay them off, they have a right to go after it. You may have insurance that'll cover you from that. However, some insurance policies you'll find are pretty amazing that all of a sudden that particular thing is not covered. So you don't want to take the risk of that. You don't want to go down that road. It's very dangerous. And I'm going to give you a statistic that was told to me by one of the top lawyers in the country. 85% of all the lawyers in the world reside inside the United States. That's a pretty scary thought. 85% of all the lawyers in the world are here in the U.S. Okay, now here's a scarier thought. There are more law students getting ready to graduate law school than there are practicing attorneys right now. Now, what does that mean to you? That means that every law student that graduates and becomes a lawyer, they have to earn their keep. So they get hired by a law firm, and the law firm says you need to have at least 2,000 billable hours a year, 40 hours a week times 50 weeks, you're off 2, okay? 50 weeks in the year, that's 2,000 hours. So you have to have billable hours. Well, think of all those people that are looking for a job, they have to be able to bill. What are they going to do? They're going to find every lawsuit they can possibly find. You wore green shoes, somebody didn't like it, they're going to file a lawsuit against you. You stubbed your toe, you're going to have a lawsuit filed against you. On and on and on it goes. So be wise, protect yourself going in. Do not be a sole proprietor. If you are currently a sole proprietor, change it. You can go elect any of these. I would suggest you go talk to an attorney. The easiest one to do right now is LLC, but go talk to your attorney. Don't play games with this. Okay, if you go and you become an S corporation or a C corporation and you don't like that, you're allowed to change it, but you can only change it once in the lifetime of the business. So let's say that you are an S corporation because you started off small And then you got bigger and you decide you want the benefits of a C corporation, which are not that much, okay, but not much difference between the two, and you make the election to change. Okay, so you make that election to change, and then down the road you're like, I don't really like this so much, I want to go back to an S corporation. You're not allowed to do that. Once you make the change, you cannot go back. So again, to protect yourself, do not become a sole proprietor. Do not. I don't care what lawyer tells you it's okay, they're not going to pay your bills. And if they say they will, get it in writing. Okay? I would go for an LLC. That's up to you, between you and your lawyer. I'm not giving you legal advice. S corporation is the next way to go, and then the C corporation is like the main way for most companies once they get bigger to go. Right? But for you starting out, take a look at these. That's the difference between the two of them. It's generally taxation and liability. Top taxation, highest level taxes you're going to pay. Highest level of liability, basically your life is on the line here. Lower taxes, you definitely have protection here, and you have the lower taxes here. You're protected as well. Higher taxes here, you get a little bit more write-offs, but you're not going to have to worry about some of that stuff right now. So anyway, those are the four entities, and I think there's a couple other ones that we didn't cover that you don't need to get into, like general partnerships and limited partnerships. That is basically reserved for either law firms or for real estate companies. Now, I'll just touch on the general partnership real quickly, is that you would have a bunch of limited partners. Let's say they all put $1,000 in, you had 10 people come and they gave you $10,000 total, so $1,000 each. If something goes wrong down the road, they are only liable up to their investment. Let's say in this case it was $1,000 each. They can't be held liable for any more than that. You, on the other hand, are the general partner. You are liable for all of it, all the liability, all the taxes, all the fines, all the costs, everything. So do not go down that road, at least not without talking to your attorney, okay? So again, hopefully you got this. Sole proprietor, big no-no. LLC, probably the best way to go. S corporation, and then C corporation. So there's your entities, there you go. And again, I can't stress it enough, do not become a sole proprietor, okay? So hope you got something out of that. Hope it gave you some information to think about. Take that to your attorney, sit down and talk to them, and then make your decision and move forward from there. We're going to talk next about, on the next one, we're going to talk about getting your tax identification number. If you got the download, the book, the free ebook, it's in there. The information is in there. If you did not go get it, then shame on you, because we've been talking about this. Okay, go get it, and I'm going to stop talking about it, because if you didn't get it, you're going to get lost here shortly. So go to www.getaninstant.raise.com. It's on the screen for the last time. Getaninstant.raise.com. Go there, and we'll see you in the next video.